We're going. Oh, we're live. Hi, James. Welcome to Venture with Grace.
Hey, thanks. So nice to be here.
Okay, so to start the show, I would love for the audience to get to know you a little bit more. So you grew up in Canada and you have been a squash player. Why don't we talk about what were some core lessons that you've learned from squash that you kind of took into venture capital today?
Yeah, totally. So I grew up in Canada, like you said, playing squash as a kid, and then played in college at Penn before starting my career. I'd say, like squash is a very interesting sport. It's a very
Mhm,
like niche racket sport. You're in this
mhm,
room alone with one other person hitting a ball against a wall.
mhm,
And I think like the main thing that individual sports teach you is like a lot of self-reliance. Like it's
mhm,
very tempting just in general to underrate your own impact on stuff, to like both blame and reward other people when things go well or don't. And I think like
mhm,
squash really teaches you like it's on you when things go well or not. There's nowhere else to look,
mhm,
and you have to like be able to like live with that. And I think that both gives you resilience when things don't go well, and
mhm,
also sort of like teaches you that you need to put in the work even when it's not game day, because when it really comes down to it, like you're gonna perform differently whether or not you've like
mhm,
practiced and hit the gym metaphorically and all that good stuff. And so I think there were a lot of lessons there. And then I
mhm,
think like like college squash, and I think this a lot of people who play individual sports probably have this experience when they go to college.
mhm,
You like all of a sudden are on a team, right? And so like
mhm,
there are now other people who play a real role in like whether or not you win, because you're all playing against one other person on the other team. But ultimately what matters is whether your team like wins net.
mhm,
And so I think that's like a very powerful thing, because it teaches you like, hey, listen, there are actually like all these benefits to being on a team. You build
mhm,
incredibly strong relationships with each other. Some days you're going to be feeling great, other people won't be, vice
mhm,
versa. And like there's a lot of power in that. And so I think
mhm.
like so the combination of having the individual experience and also a team experience with squash has been super helpful for me.
I think that's super interesting. And that's actually really deep. Like put into the work when even if it's like not the game day, I feel like that's like a really important lessons. Maybe we could talk about what does that entail when it comes to investing. So since like I feel like you have the perfect resume that you have worked at like Goldman Sachs, like
Oh,
General Atlantic.
perfect.
Yeah. Like I think it's like a pretty good resume for your career. But I think one of the questions that I thought was really interesting, the other podcasters were also asking was like, how do you, I guess, like, how do you kind of like get this kind of like perfect resume? So, like, to be at General Atlantic, now at Sequoia, like, it's like kind of like a lot of people dream job. And then even, you went to the best school and stuff. But I think it's a very competitive field. And how do you think about like, you became the person that they pick to join? Or maybe you
Yeah,
picked them. So,
yeah, totally. I mean, like the short answer is, or like the first answer is like lots of luck, right? Like job
mhm,
processes and career advancement is always kind of like a random thing to some extent. I remember applying to sort of like junior summer internships in college, and like
mhm,
you don't get all of them, but you get some of them, and it feels a little bit random which ones you get, which
mhm,
ones you don't, and you obviously have to put in work to put yourself in a good spot, but ultimately there's
mhm,
like randomness involved. And so there's like always that overhanging all of these conversations. I'd say like growing up, I knew that I was interested in business, and to me
mhm,
that made it like clear that like in undergrad might as well do something related to business. And
mhm,
so when I was kind of deciding on college, I thought like Wharton was kind of like the place to go to learn about
mhm,
business. And I think that ended up being like very true, both in terms of like the skills that you get from the classes, the people that you meet and are exposed to. And then honestly, like a big part of the value prop of any college is putting you in position to get the kinds of jobs that you want after school.
mhm,
And so I think that like, having gone to Wharton, you're in like a nice spot for job recruiting stuff. And I think also like the student athlete thing is something that people like when they're recruiting. And I think like you have to be able to tell your story in those interviews. And I'd say that like my first couple jobs, being like Goldman during an internship and then GA full time, those were very like, I think like on paper you kind of meet the bar, and then it's about like showing up on the interview day and trying to connect with people, trying to like have them understand your story and think that like this would be a person that I'd like to work with. And so those were kind of like the early jobs. And I'd say like an interesting thing in your career that happens is like the first jobs are mostly about sort of like the interview process and the networking around it to
mhm,
get them. Over time, that kind of shifts, and it ends up being more about like how you did in the jobs that you had in the past.
mhm,
You have a real track record at that point. People will talk to people that you've worked with
mhm,
before. People might even hear about you from sort of like people that you work with, right? And so like I'd say my early jobs were very much a function of like standard things like resume and interviews and stuff like that. I'd say the Sequoia job actually came because like one of the partners at Sequoia had heard good things about me at GA and reached out and asked to chat. And so I think that like that jump was more a function of hopefully doing a nice job in my previous role, and then also meeting everybody and doing the interviews and all that good stuff. But I'd say that like it was a combination of luck and just trying to like do well at the things that I was doing at any given point in time. And those two things have led to like a really cool career so far.
For sure. I wonder, let's talk about GA. So like, since I feel like you established your career there kind of, so what were the similarities of like working at GA versus Sequoia? And I guess the other part is like, since like, I feel like at growth stage, it's like, you know, when it's early stage, a lot of it is like, I would say sourcing and winning. But I think like at later stage, I think sourcing only become like as important as I guess like I think winning is like because of you work at these like places like GA or Sequoia. I don't think winning is that big of like not that big of a deal, but like you guys have like all the right to win technically. So like I don't think
you
like,
still definitely have to work at it though. I would say.
oh, that's really interesting. But like I mean I'm sure you have to work at it, but I feel like as like a lot of people who are listening, maybe working on a different fund or like working on their own startups, I feel like they have heard of these names. And how do you think about when it comes to picking, or like what do you think what do you identify as like the at your stage, what is like the most important quote unquote job?
Yeah, totally. I think they're all important. You know, I think the value chain is like sourcing, picking, winning, and then like company building. I think they're all super important. I would say that you're definitely like right at the earliest stages. Sourcing is probably like harder. I think at the growth stage, like once somebody's raising a Series B, you sort of do have some feel for what the universe of potentially interesting Series B companies are. And there are a lot of them, and you can't talk to all of them, and you need to be thoughtful about what to prioritize. But like, it's sort of a knowable thing versus at seed, it's like unknowable, right? This person is thinking about leaving their company to go start a different company. It's like, okay, somebody needs to have told you that, you know, like you can't find that on PitchBook. And so I think I agree with you directionally. I'd say like the Series B in this stage, I think like picking is probably the most important part of the job. I think there are like a lot of great firms that have a lot of visibility into the important companies. I think there are a lot of great firms that have like a brand that lets them win. And I think that like picking is really what differentiates at the Series B. And I'd say that's probably like becomes true still at like the GA really later stage parts of the jobs. Like in both the GA job and the Sequoia job, like what I spend my time doing is some combination of like sourcing and diligence, right? And sourcing is a bunch of different things. It's like talking to people at other funds, it's sending cold emails, it's scrolling through Twitter to see if something looks cool, on and on and on. And then having those conversations and thinking like which companies are worth prioritizing, having more people meet, really like pushing. And then diligence actually looks kind of similar at both places as well. Like you talk to the customers, you talk to people who know a lot about the market. You try to think about some of that stuff yourself. You like build a model, you look through all the data, you like spend time in Excel. And so the activities are kind of similar. I think what's different from GA to Sequoia is like maybe three things. One, like we look at earlier stage companies than we did at GA. And so naturally, like more of the diligence and more of the questions shift from quantitative stuff to qualitative stuff because there's more, you know, uncertainty at the earlier stages and you need to think about things more qualitatively. And then second, I would say like we are interested in backing companies both where we will make a really nice investment return and also that have the potential to be really legendary and impactful businesses on the world. And I think that like second part of that is not always a consideration for like all investment firms. And it's like a very cool part of Sequoia that we're so focused on like helping the daring build legendary companies. It's like a different thing that is running through your mind when you're thinking about an opportunity is like, does this company have the chance to be legendary or not? And so that's the second thing. And then the last is just like the team is set up so differently. You know, I think like at the really late stage, a lot of growth firms are set up sort of like private equity firms. You know, like you have a bunch of different titles, the sort of org structure looks like a pyramid. And it feels very kind of like financy. I'd say our team, by contrast, is like basically it's 9 people, 9 or 10 on the growth side. That's for like all the geographies, all stages, Series B and beyond. And it's super flat. You know, like everybody on the team is sourcing, everybody on the team is trying to do some diligent stuff. Pat, who runs our team, will sometimes like build the model himself, and so it just feels much more collaborative and flat, and like you as an individual on the team are really like key to what we're doing as a group, and like you have to be performing, otherwise like the team feels it. Versus like really big orgs, you can kind of like, you could tell yourself like, oh, this stuff is going to happen with or without me. Like there's a big machine that's working here and I'm just a small cog in it. And so like the smaller team is very cool because you like get to and have to do much more as an individual, no matter where you're at in your career.
I want to maybe double click on like a few things. One of them is I like what you said about like, it's still like maybe picking become like the most important things, and a lot of it is like quantitative than like qualitative. I'm sorry, like these two words are very
all good.
I have a hard time too, like just like pronounce them. But okay, so you have invested in like a few companies. Like maybe we could use like some of the company as like an example, right? Like for example, let's call it Clay or Z. So like I feel like the editor or like the coding editor, it's like a very popular category right now. How do you identify like Z versus like a lot of these different companies that are doing a similar thing? What would be your benchmark to evaluate them? And then, for example, also in this category, there is, some of like the famous editors in the world, like a Cursor. How do you think about if a category already have some really big exit-looking companies? How do you think about the competition in like these like kind of like category that are very popular that builders are building?
Yeah, totally. Maybe I'll talk about it like in general. And I'd say that like basically every category that is interesting in AI right now, there are multiple people that are building companies in it because there's just this like massive technological shift that's happening, and that creates a lot of opportunity, and a lot of people are going after it. And so I think like when you look at categories where there are multiple people building, I think like there are a couple things that you have to think through. One is like literally just what is the market telling you? And that's like probably the most important thing always in all categories is like, where is the market pull? What does the market seem to be like reflecting back to you about the different companies? So that's like one thing. I think second, you need to think about like, are there things about these different businesses that make it logical that one of them will work more in the short run and less in the long run versus the other? And so I think like vertical integration is an example of that in general, where vertical integration is hard, it takes longer, but often can set you up to like capture more value in the long term. So that's like another thing to think about. And then I think it really is about like the people, honestly, at the end of the day. Like all of these markets are very uncertain. The like technology is shifting under your feet as you're building more than in previous shifts, where there was sort of like in the cloud transition like was a thing that evolved over many years. But I think like you were pretty sure about what next year's sort of like cloud infrastructure was going to look like this year. And you could kind of build your company based on that. I think in AI, it's way harder. There's way more uncertainty. And so like way more of the bet is about the founder's ability to kind of like navigate that. And I think that those are all things to like think about in competitive markets. And there are a whole bunch of them. Coding is definitely one. I'd say like coding, because the models are so good at coding is a category that has really like ripped. And so it's cool to see. But I think it's true in like a whole bunch of different spaces, honestly.
Maybe can you walk us through a deal that you've like done that from like when you meet the founder, what were something that you kind of like saw in them as a founders and to make it like generational? And then how do you kind of like evaluate or like diligence a company to maybe thinking about like potentially like exit or like, I guess like also winning the deal as well?
Yeah, totally. One that is like kind of a cool story is like Aspora here. And so Aspora, if people don't know, is building basically like a modern neobank for non-resident Indians, so people who are from India, they don't live in India, based on stablecoin rails. And the wedge is to send money back home for the lowest fees. And so you can use stablecoins to send money back to India. And then eventually they hope to layer on more financial products once the money lands in India for their users. And so it's like an interesting value prop. I would say the sort of like sourcing story there is kind of interesting, where like the founder Parth was a Stanford dropout who was building the company in Dubai. And we like flew to Dubai to meet him and the team. And it was me and George and Luciana, two of my partners in the London office. And George had met the founder once over Zoom and was like incredibly impressed by him as a person. And I agree, he's like an incredibly impressive guy. When we landed in Dubai, we like went to their apartment where they were working, and there were like 7 or 8 of them in this 2-bedroom apartment, and there were like beds everywhere. And we were trying to like chat. And so we were trying to find a room where we could speak with Parth. And he opened this closet basically. And there were like 3 chairs in there that we could hang out in, but there were 4 of us. And so we were like, all right, man, like maybe we'll go to our hotel to chat. And so anyways, that was like not the best setup for a meeting I've ever seen. But what it really showed us is like this team grinds, and they don't care about having a fancy office. They don't care about looking like they're more official than they are. They're like 8 people in this tiny apartment, and like it's clear that they're working like 18 hours a day. And I think that gave us a lot of conviction that like they were just gonna keep pushing for the long run. And so you had this like conviction in the team. I think then like through diligence, like you get all the numbers, and they had like incredibly detailed customer level data of every transaction that had ever happened. It like broke my Excel constantly. It was incredibly painful. And you just saw how compelling the product was for customers. Like the growth was insane. It was just like totally going vertical. And once customers had sent some money back home with then called Vance, now called Aspora, they just built this really powerful habit where every month they would kind of do the same thing. And I think like once you establish yourself as like the core place that a consumer goes to do something important with their financial life, you have a lot of opportunity to do more for them over time. And I think like the interesting thing about that market, sort of going from like team to like traction to market, is non-resident Indians are incredibly wealthy. Non-resident Indians are actually like some of the most well-educated and wealthiest like diaspora in the world, including in the US. There's a cool chart that I saw, which is sort of like wealth of a diaspora group in America, sort of on the y-axis, and then the x-axis is kind of like GDP per capita of that country. And normally those two things are correlated, right? Like you're an immigrant group from a wealthier country, you are as a group wealthier in the United States. That makes sense. India is like a huge outlier there, where India as a country is sort of growing quickly and developing quickly, but still quite poor. But the Indian diaspora in America is so rich. And I think like the thing that you combine is a really large group of non-resident Indians who are really wealthy with a real desire from that group to like invest their money at home, both out of a bit of a sense of nationalism and also because the Indian economy is growing really quickly. And so there, like you sort of feel that there's like a really big market opportunity for somebody who can tap into that sort of like vein of money. And we thought that they were the team to do it, and the evidence said that they were so far. And so we decided to invest. Since investment, like they've expanded to more countries, they're growing incredibly quickly. I think like the thesis is still not fully proven out because they're a relatively early stage growth company, but things are going pretty well, and we're excited about that one.
Amazing. I want to maybe like double click on like the meeting the founder part, since like I think a lot of our listeners are probably currently in YC or ZFL or like equivalent. So like and then they're like still in like the very early stage, even maybe like let's call it like people from Fall Badge or something, they're like still building. How do they get on the radar of you and your partners to even have enough traction to be like having a conversation with you guys?
Send me an email, we'll reply. So I'd say like in general, we try to take like, or at least I personally try to take like a very wide top of funnel approach. I'd say that like if people reach out and they seem to be building something interesting and they seem to be like an interesting person with a background that makes sense for what they're building, and even better if they have a bit of traction, like for sure, I think most people are willing to chat. That's one. I think like warm intros are always better because it just is sort of like social proof that you have gotten somebody that we know to vouch for you in some way and like make the introduction. And so that's always a pro as well. I think it's different for the earlier stages as the growth team, right? Like I am so happy to meet people building startups right at the very beginning. I think it's like one of the most fun parts of the job. I am also not the right person to lead that investment on the Sequoia side. And so I will normally then bring in somebody from the early stage team if I think it's interesting. At the growth stage, I'd say like the thing that determines whether we like are interested in having a meeting is pretty similar. Like it's sort of like, one, does this person seem special and compelling? Two, like does their idea seem plausible? It doesn't need to be the sort of like immediately obvious as like the most revolutionary idea ever, but like, does the idea seem plausible? And then 3, at the growth stage, like ideally, is there some traction that we can point to say like, this is the evidence that people in the world want what you're building? And so I'd say sort of like those things are like the right things to include when you're reaching out to VCs, sort of like who you are and why you're great, what your idea is and why it makes sense. Ideally, what like some sort of unique insight is that you have. And then like, what is the evidence that you're right? You know, what's the evidence that people want it? And that can be revenue. If you have revenue, that can be usage. If you have usage, that can be, you know, like pipeline. If you have pipeline, you know, like whatever the right metric is to show that there is demand for what you're building, that I think is like a really important thing to sort of like put front and center as you're talking with VCs, especially I would say if you're like on the younger side, if you didn't work at the fancy companies that VCs like to invest from, if you aren't as plugged into like the Silicon Valley network, like I'd say for better or for worse, that definitely like raises the bar on evidence, you know, for people to engage. But if there is evidence, people will almost always engage, I will say.
I agree. I guess like the other question I had was like, when it comes to like product, or you mentioned about like the, you know, Aspora is like growing in like the hockey stick kind of way. From the product perspective or like from the metrics perspective, is there any general benchmark that you guys are evaluating on? And since like I feel like the AI companies are growing at like a different rate, as you know, there is like the 1% $10 million company. So how do you evaluate these kind of maybe seed strap founder or like bootstrap founder even like to like nowadays also like as like the venture backed founders, as I feel like this, I don't know how many actually bootstrap founder actually make it to like Series B level of investment later on, or I don't know if you've seen that kind of trend. Oh, basically the question is like if there's like any benchmark or metrics to judge these like AI companies right now, and who make it to like Series B and beyond.
Totally. So the short answer is like, no, there is no like Sequoia proprietary like database of all the companies ever and how fast they've grown and, you know, what the benchmark is for being like good at any given scale. So like, I wish that existed. That would be cool, but we don't have it. I'd say like, and then also on like sort of the seed strap or bootstrap point, I think it is like super interesting, this trend of like people building really valuable companies with less venture funding and doing it with a much smaller team because of AI, and because just like across the board, the barriers to starting a company have been lowered so much, which is amazing. And so I think it's a very cool trend. And I think there are a bunch of companies that will be very valuable where actually it doesn't make sense to raise venture funding, and like you shouldn't, but like you should go build a 5 to 10 million ARR business with 80% gross margins and pay yourself multiple $1 million per year. Like that sounds great. I think that's awesome. And so those are on those two things. I think like on the metrics, I do think like one of the core things that we try to think about when we're making growth investments is like this concept of like emerging market leader. You know, it's like one of the, we have a spec, there are 5 things. One of them is emerging market leader. And I think like that doesn't need to mean that the company is the biggest today, but it means that we need to believe that this company is like emerging as the market leader, you know, and they will be in the next few years. And I think like to the point about benchmarks, that means sort of that we tend to judge companies and their growth like relative to other companies in their market and in their space. And so it's like definitely true that AI companies are growing faster than any generation of companies before for a whole bunch of reasons. The technology is magic. And so if you sell people magic, they'll probably want to buy it. Everybody is already connected to the internet. And so you have like immediate distribution to like 8 billion people versus in like the, you know, early 2000s era, the internet was just way smaller. And so you didn't have as big of a market from day one. And so for sure, we judge companies relative to others in their space, mostly because we like to invest in market leading companies. And if somebody else has grown way faster than you, there has to be like a pretty compelling reason why you are the emerging market leader. And so anyways, all that said, like I'd say that most companies in AI right now are like doubling, tripling year over year that are having a lot of success. I think that we don't have some sort of like hardcore box that you need to be in from a metrics perspective for us to invest. Every company is different. Every journey is different. We make, and all venture firms make all their money on a very small number of big winners. And so if you have arbitrary rules that prevent you from making an investment in one of those companies, like that's like the dumbest thing you can possibly do. And so we don't have any arbitrary rules, but like for sure, we like it when companies are growing fast, and for sure companies in AI are growing faster than in previous tech shifts.
I wonder, what is the emerging market right now for you?
I think like they're all still emerging. I think we're gonna have a lot more revenue across sort of like AI categories, right, in the future than we do today. Voice AI, this is not like a particularly differentiated point of view, but voice AI is definitely a market that is emerging really quickly. We co-led the 11 Labs employee tender. I think it was announced earlier this week or maybe last week, and that business is doing incredibly well. And it's really like the company that's powering this generation of voice agents. And
I actually went to their office last week.
Oh, cool.
Yeah, it was like a very interesting experience. And then there was like 3 other companies that were demoing using like 11 Labs product, I believe.
That's sweet. Yeah. No, it's a very cool thing to like, meet a bunch of startups that are doing really interesting stuff in the voice agent world, and then like hear that they're all customers of 11 Labs, and that's sick if you're an investor in 11 Labs. And so anyways, I think that trend is quickly emerging, and I think the reason is basically like a whole bunch of people spend most of their time or all of their time answering phone calls as their job. AI can now do that. That creates a lot of value, obviously. And then also like you see the traction with 11 Labs, and it's incredible. And also I have never spoken to a voice agent in my life. And my guess is that like I will in the coming 12 months, and I will more in the next 12 and more in the next 12. I think that's true for all of us. And so if you think about like how mature that shift is from kind of like human-driven customer service where you're waiting for 20 minutes and then you talk to somebody who's probably not having the best time because it doesn't seem like a particularly fun job, to like always available, very well-informed and fun to talk to, increasingly like voice agents. I think we're so early in that trend. I think it's going to happen like pretty quick, but also like over years and years and years. And if you look at the public call center stocks, like the publicly traded call center companies, they're all down massively, even though revenue hasn't moved yet. And so I think that also reflects sort of like the public market's view that this category is going to be owned by AI, but their financial performance actually doesn't show that yet. Like they're still kind of flat to growing a little bit. And so I think that trend is like still very emerging, even though, almost every venture firm has put out a market map on it by now.
For sure. I wonder, what is like a question that you would always ask the founder besides like the traditional ones, like, why are you building this? Is there any particular question that you feel like it's like a staple for you to evaluate the founder?
Yeah, this is not an original question. This is a Pat Grady question, and I don't know if he invented it. And I don't ask it every single time, but I think like a very good question for companies at like kind of that early stage growth range is like, when you have $1 billion of revenue, where will it come from? And like, who will be giving you that money? And I think it's super interesting because a lot of times founders haven't really thought about that question before, which is like so valid. Like you're fighting day to day. Like if you're at 5 or 10 million of ARR, it's like, I'm trying to get to 20, like I'm not thinking about $1 billion. But I do think it helps you understand, like, one, how much are they thinking about Act 2 already? Because most of the best companies that we and everybody invest in have Act 2s. And also, like, how well do they understand, like, the size of their market and, like, what markets will be needed to get to $1 billion and stuff like that. And also, thirdly, sometimes people are like, oh, like, I don't think we can get there. Like, honestly, I think, the market is this big. And, like, I'm cool with that, And so that, I think, is, like, again, to the sort of bootstrapped or seed strapped point, I think it's like totally valid. Like if you have a business with 100 million of ARR and you think that's how big you want it to be, like that's amazing. It's not really what we're trying to invest in though. And so it's like good for everybody to know that up front. And so I think that question and other sort of similarly like really future looking questions are like a very good way of getting a sense for like how people are thinking about their businesses, how big their ambition is, and also like how big the market is and all sorts of stuff like that.
I wonder, I guess, like, what would you want to hear from it? So like also you mentioned about like Act 2. What is a good example of like an Act
2? So what do I want to hear from that? Honestly, ideally like some thoughts on the answer, right? Just like conviction that the company will get to $1 billion of revenue, and then like a plausible story for where it comes from. I think also what's totally fine is like, hey, I think that our core market gets us to this. I think to get to $1 billion, we'll need to do something else. I don't really know which one of them is going to work, but here are like 3 thoughts, I think just like honesty is always the best policy, as they say. So that's that. And then I'd say like Act 2, I don't know, like a sport we talked about already, I'd say like Act 1 for them is send money home for free. Act 2 is, and then we will build cool financial products for you once it gets here. And like that is very clear. I think for, I don't know, SpaceX, Act 1 is launch, Act 2 is Starlink, right? And there are more acts along the way through there. For Google, Act 1 is, search, Act 2 is everything else. And so I think like there often are like Act 2s of that sort. And I think like what determines whether companies typically are like $5 to $10 billion businesses or $100 billion businesses is like, how well can you execute on those Act 2s? I think like HubSpot is maybe an example, and Brian Halligan is the man and works with us part-time these days. Like Act 1 for HubSpot was marketing. Act 1 was really inbound marketing, but marketing. And then Act 2 was like CRM. And now I actually don't know the stats, but I think like their CRM business is as big, maybe bigger than their marketing business. And that wasn't obvious at all, that, there was room for another CRM when Salesforce already existed, that a marketing company could get into something that is kind of different. But executing on that Act 2 has like led to HubSpot being like a many tens of billions of dollar company instead of like one of a handful of very valuable but not legendary kind of like $5 to $10 billion marketing tech businesses.
I love that. I feel like that's such a great example, as like HubSpot conference like last week, and then they were amazing sponsor of our conference as well. So I wonder, when you were thinking about like if the founder that they came in without like any thoughts of that, like is it like an immediate pass? Or since I feel like the earlier stage founder, like I asked like a similar question before, it's like how do you hit like $100 million ARR or something like more?
Yeah.
It's like bare bone. People are like not adjusting to the answer, or like the answer is like very delusional. How do you think about like the details of like their thought process?
Yeah, totally. No, I don't think it's like a non-starter at all if you don't have a good answer to these questions. I think partially you get to see how people think through them in real time, which is valuable. I also think that like, there's like a funny thing where like everybody sees a lot of pitch decks with numbers on them about market size that are like really huge, right? And like asking questions like this can be very clarifying on like, okay, but like how big is the market actually? How much revenue do you think you will get from what you are doing today? So anyways, I think that that's like another random value of asking questions in this genre. But no, it's not a non-starter at all. VCs spend way more time like intellectualizing about companies and like thinking like on a mountaintop, about like what 3-5 years down the road will look like than founders, because like we don't actually have to go run the business day to day, and like running the business, it turns out, is really, really hard, much harder than what we do, and takes up a lot of your brain space. And I think that like makes sense. Like winning the battle at hand is definitely like always the most important thing for any company. You don't have the right to get to $1 billion of ARR if you never get to 20, and so I think it makes sense for them to think about the present day. And so no, I don't think like it is disqualifying at all. I think there are great reasons why we like spend more time thinking about this stuff than they do, and that's probably right on both sides, honestly. But I think like seeing how people think through it in real time is always interesting. And I think also like if it's clear there is like no plausible answer, then that's information.
I wonder, so thinking about like portfolio construction and like maybe the decision-making process of the fund, I guess like how frequently do you invest in a deal? Like, or what would be like the valuation benchmark that like you got, not valuation benchmark, but I guess like valuation cutoff line to make sure like, it kind of like still makes sense to invest?
There's no valuation cutoff line.
It's Sequoia, but anyway. So.
Yeah, there's no valuation cutoff line. It goes all the way. The motto of the firm is to help, or the mission of the firm is to help the daring build legendary companies from idea to IPO and beyond. And I think we like live true to that. We have different pockets of money that are used to invest in companies at different stages along their life cycle, but there is no valuation cutoff. I think we always need to believe that there's a nice risk reward to our investment from here. And obviously the bar for that gets higher as valuation gets higher. Just you need to believe that the company ends up being bigger. But no, there's no like valuation cutoff, I would say.
I want to be mindful of time. Maybe we wrap with like a quick fire round for you.
Sure, sounds good.
What's your favorite book?
My favorite book, Thinking Fast and Slow, is like one of the first sort of like intellectualized books I read, and it was great.
Who made the biggest impact in your career?
I'd say my first boss at GA, Zuhair Khan, made like a really big impact on my career. Just like, first principles, good habits, all that kind of stuff.
Who would you invite to your dinner party?
Who am I? I think Elon would probably be a lot of fun at a dinner party.
What are you gonna ask him?
I think I would ask him about like company building stuff, and then I would definitely ask him his thoughts on some of the things he's been doing more recently, what he thinks was a good idea versus not. I think it'd be interesting to hear.
Where can we find you outside of work?
I still play squash. I love to ski in the winter. I've started to surf a little bit, so maybe there. All around SF.
So active. Well, James, thank you so much for coming on the show today. Again, I sincerely apologize. Why do I feel like it was supposed to be 11? But
no worries at all. Thanks, Grace.
Thank you so much. Okay, let me quickly end stream. One sec.